Welcome to TradeTheNBA.com. This is John. This report is for the 12th of May. Well, we talked about the ABM yellow line right there at the 41.62 range, 2.25. And being below that, we were going to experience some weakness. I think the more relevant call was the dip of the NASDAQ because it was approaching its 50% mark. And as I was talking about before, when you reach that 50% mark, it becomes very popular for institutions. Now, it's not the case in the S&P because it's been performing much stronger, but we've also seen the decline in it with DOC cyan over red, and it's just been back and forth with the little dips of orange. That's what's helped keep things going. But as the orange started to rise and steel crossed on the first down day, then we had a little bit of follow-through continuation. A little bit of softness in the post-market right here, but this was the critical one. We came down to the 50% on the NASDAQ, and boy, there was just a lot of activity at that point, and that's institutions love to buy those setups. Pushed back strongly above it, but then actually came back to it a second time during the day and bought that one up again. And that's what lifted things. So that's going to become a threshold for those watching in the broader time frame. If we look to 50K from the ES standpoint, it was very interesting because we were coming off buy configuration that was pushing things up through here, but we created positive extremes right here, and that was at the 41.74 level. And then again on the secondary run right here that started at the 42.10, and we literally just traded sideways across on that action. And rightfully so. I mean, you had the NBI yellow and magenta here well above the 33 level, as well as blue riding above the green, and white below that 10. So actually, it's right around 7 is really becomes a threshold for the white. When it moves above that, you start to tend to get a bit more weakness. But we ended up with the and this is Deal Paint 2A. For those wondering, and we actually traded counter to it. Actually came to short into that pop on there because I could definitely see that there was still the weakness set up within it, and on the 5K charts much more bearish. And sure enough, we filled the first 42.10 and broke below it, and then once we get to the 50 here on the 50K chart, came down, filled the 74, and then literally completed the entire move that takes us back to way earlier. And then I was pointing out throughout the day on our 5K charts, and we'll look at those in a moment, where yellow dips below the blue, we tend to get a singular pop, but it's a secondary rollover where you tend to get softness. And it started in between and then finally capitulated. It just takes longer on a 50K to get the ultimate result. So that's consistent with our expectation. Now, of course, we now have higher extremes on the previous dip of the low. So now we've made a lower low, higher extremes. We still have lower shakeout though. So that can balance out. But you've got reset of the DOC from the red standpoint, but that's still continuing lower. So until you get a pivot back up of midterm buyers and that to help support things, I think there's just going to be some more challenges going through. But we kind of expected this to start fading off. I mean, you had quite a few mixed readings, and I think this is that evaluation as to exactly what it means. If the maximum, job creation was an aberration like I was talking about, and the reality of record job openings, this is potential pressure for inflation, and any savvy market person is going to be watching that, understanding the implications, particularly for interest rates. Even if the Fed doesn't want to raise them, privately they will start to rise because there won't be any interest. And if we start to see a sell-off, this isn't really what I would consider a sell-off. I mean, for the NASDAQ, yes, a 50% retrace, perfectly legitimate within that. The fact the S&P is doing much better really is holding things at this particular stage. So that's the current state of things. Of course, you're seeing that build in gold that has been steady now because everybody who's seeing it, and of course that pipeline episode of restricting fuel, and you see fuel shortages now in parts of the eastern United States. This all has an impact, and that creates inflationary pressures secondarily. We talked about that threshold, oil and wages. Keeping them down is critical to stopping inflation from running rampant. That will have a significant impact. And of course, printing all those dollars, the euro is going to continue its ascent. No question about that. So we get a long 50-day. Now what you'll see on these little ellipses is every time the yellow dips below, it's not that you aren't going to get a rise. The expectation is that you probably will. The higher that NBI blue is, closer to 10, the stronger that move is. Usually the 50% becomes the cap on those moves. And really what you're looking for is that first rollover is likely to result in the pullback of it and the fade. And we can just go through time and time again each one of those as that first pump up begins to fade. And literally I look for the either magenta and red here making a down pivot as usually the point at which we start to get some clarification on that. And again, it just kept happening time and time again, which was just an expression of the weakness that existed out there. When we didn't get it, we expected a bigger run, and this is where I pointed out this white dotted line on our Skype chat, and sure enough, move came through, held up pretty nicely right around the 50 because there was none of that requirement with the yellow riding high and the magenta staying above the whole range through, and sure enough, came through, went all the way back. A secondary component and something that I was putting together for the futures. When we see our 100% dip and you have flat line on the zero line, you tend to get a push towards that 100%. When you have the 100% falling at the same time you're making new lows, you tend to stay towards the lows. So it's just a function of what we see from the Morganacci setups. So once we did get to the 100%, clean sell signals came through, DOC spread, all of it. Actually started that one earlier. We were talking about that because we had stayed below blue, below the gray here for a while, as well as red having dipped underneath it. Just a matter of waiting for a little bit more of a rise in the white once it got over that 6 level. Pretty decent from an entry standpoint, given the risk to reward setup here being near the highs. And sure enough, it started to break down, gave the full reading as it was going, dipped below the red line, so we knew any little pop was still going to come back and retest because we had that dip of the yellow again each time underneath, rolled over nicely, went all the way back to the lows, and then we kept getting a series of these and kept marking them and putting up the pictures each time. And then I pointed out this one where now you had blue doing the same setup but above the 10 level, and that would produce a bit more of a run, and sure enough it got us all the way to the 50%, but likewise rolled over. And then once it created this little pivot right here, it's a small one but nonetheless significant, that turned everything around and that gave that NBI white clear run. And sure enough, the falling high started right there, pulled it right up to the 100%, and we just kind of traded across for the longest time. It seemed like forever because it was going so slow, and then boom, we just started to get lower and lower readings, and then it broke down. But again, that dip of yellow below blue didn't happen, so when the buy signal came, it took us right back up to the peaks. And then they started to occur. This is a little bit different here when it's coming off of the pivot. Usually you're looking for it when it's coming around in blues trading, but needless to say, still did the same thing. Little pop up, came right back down to revisit right where those lows were. And then we peaked up again towards end of the day, went all the way back down to 0, and then end of day buyers came in, brought that up. Again, I forgot to mark that one as well. You can see it right there. And just from a reading standpoint, you can see it. So yellow low 451 to the blue at 641. So clearly dipped below. So my expectation is on that first pop-up. Now, ideally, you want a nice smooth ride up, and then you want the, like over here where the yellow and magenta dip down below. That didn't exactly take place in this one. It actually held on pretty nicely, but then when it did break, came all the way back down to the 23%. You just had a big dip of the red right there that caused a little pop, but eventually it did fill back all the way to 100% just after market close. And that leaves us to where we're at right now. We've had another new low dip that took place there, and this one coming all the way back up to the 100%, and we're in just a little bit of a soft space right now. Too dramatic. So more volatility, a little more action, particularly as there's an uncertainty, and we may even start to see a transition into some cyclicals from this, which will cause a rebalancing, and that will create even more drops and flips. So I think we're going to see a lot more activity, which is exciting from an intraday standpoint. As always, though, I will keep updating you on the Skype chat, and follow there. And any updates to the setups that I've created, we'll certainly be getting them out as you see the work I've been doing with some of the additional dot colors and that. Working along pretty nicely. Trade well. We'll talk to you later.